You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Ladies and gentlemen, welcome to the show today. Today's guest is Shirley Xu. She has 16 years of experience in property management, renovation, and sales. After many years actively involved in day-to-day residential real estate investing, she learned that it is a better way to grow your wealth through passive investment of real estate. She is a founder of Golden Bridge Investment, a platform to educate busy professionals about passive investing and live a life by design. She has been a passive investor and a general partner for several multifamily projects, which consist of 830 units. She also has an MBA in finance. Shirley, how you doing today?
Good morning. I'm good.
Good. Thanks for coming on, being a guest. I'm sure my listeners are going to learn a lot from you today. So just give us a little bit of a background about how you decided to get involved with real estate.
Okay. So I came here 20-some years ago to attend school here. And after graduate, I got a job working at corporate America for 10 years. And then one night I saw this late night TV show talking about investing in real estate.
Right.
Got the bug and decided I want to do it. And so I left my job, started buying rentals and flipping houses. Yeah, so that's how I started.
Okay. So you seen somebody on TV talking about buying houses, no money down and stuff like that, right? And you was like, man, that sounds good. So so you said you was working in corporate America. Did you jump right into it and say, hey, I'm burning the ships and I'm going to go straight into flipping the houses, or did you kind of do it part time at first?
Actually, I started learning and reading books. And back then, it's can't compare to nowadays. There's so much information, free information.
Yeah.
So I read the books, and I went to attend a boot camp. I think this called Lou Brown's real estate, investing. And when I went to the boot camp for 3 days, and then came home, started right away. I think I started only 2 months, and I decided to leave my job.
Wow, man, that's bold. You know what you wanted, and you jumped out there. So you was doing the single family homes. How was that for you? Initially, was it what you thought it was going to be, or was it kind of different?
Yes, it was when I first started, right? I'm thinking I'm going to buy 200 houses. And the cash flow, because I'm going to need a mortgage. If I figure if you average have net 200 per month, right? So if I have 200, I'll be sitting pretty. That's what I thought. And then I realized that over the years, and I realized it's not just the houses you're buying. You're buying the houses with people in it.
Right.
You're dealing with the people, and that's the hardest part. You're managing the property, you're managing the tenant. And so over the years, I've been doing this for 15, 16 years. Yeah, and I realized this is not the way to scale up.
Yeah, got you. So, when you was buying these properties, were you doing the BRRRR method, where you kind of buy it with cash, you renovate it, rent it out, refinance it? Were you doing that?
I did all kinds of the tricks, whatever they taught. So we had the BRRRR method, and I did the seller financing, and that was fun. I loved, and their sellers to this day we're still friends.
Right.
And so seller financing, short sale, or the bank foreclosure, all kinds of.
Oh man, so you were using all the tricks, huh? Cool. So let's talk about how you transitioned into multifamily. Like, so there's a lot of different asset classes out there. Why did you specifically choose multifamily?
Well, when I started and someone had, I was started thinking the residential, I realized it's, you can't scale up quickly and it's just too much headaches with the tenant. I had tried because I had close to 50 residential single houses
Yeah.
scattered all over. And so I tried to use tried two property management firms. And both I felt miserably. It just really bad. So
Yeah.
I end up have to take them back and then hire somebody. So that's how got me thinking. And also I flip houses. So I
Yeah.
renovate and flip them on the side. And I realized if I stop flipping, the money will stop. If I don't
Right.
managing those properties and the revenue just gonna decline.
Right.
But that's how I got into, and I said maybe I look into commercial. I did. I look at the uh, retail once and the office. So I did take my time check into and then find an island. I think multifamily is, I know the property management side and I think it's among all the others, I think it's the best.
Yeah. Gotcha. Gotcha. So, kind of basically the economies of scale is what really attracted you to the multifamily space.
Yes, and especially, yeah, because when you have larger multifamily and they you don't have to, you can hire a professional property management firm to managing it instead of the single family. I understand, if you hire for the single family, the property management fee is like 8% or 10%
Yeah.
for $1,000 rent. They only have $100. How much you were expecting them to do for
Right.
you, right?
Right. Yeah. That makes a lot of sense. Makes a lot of sense. So, so right now, what are you doing with your company now? Like, how are you getting involved with deals now?
I was lucky enough, so I goes to all kinds of events and
Mm-hmm.
commercial, especially multifamily uh, investment involved events. So I network with people and
Yeah.
I get to know people. And then I happen to know somebody and then they have vetted operator. And so I am always on the outlook for the experienced operator and that to partner and to get involved.
Yeah. So let's dig into that for a moment. Because there's a lot of passive investors out there, and some probably even listen to this show. How do you vet your operators? Like, what do you look for when you just say, "Hey, this is somebody I might want to do business with"?
Well, before I always, cause my job I was a mortgage underwriter before. So
Mm-hmm.
before I always thought it was the numbers. So you look at the pro forma, and then the more I do, and I realize it's not just the numbers, because anyone can make a pretty PowerPoint
Yeah.
and they can estimate, perform a beautiful. It's the team who is behind it is most important. I try to, maybe let's see if you only meet once, maybe it's not, and trying to meet with the person
Yeah.
and also look at their track record. That's the most important thing. If they just started and I might not feel comfortable right away.
Yeah.
I look at their, maybe in the past 5 years, how many deals they have done, and do they have anything full circled, and the property they already sold,
Yeah.
they bought, and what the return, did they meet the requirement or did they meet what they promised before? Yeah,
Right.
or exceed, yes.
Right, right. And those are some good points. I mean, you definitely don't want to jump in with somebody that's just getting going, especially if they're kind of trying to do everything themselves. Because that's the biggest mistake a lot of people make when they first get into this is they try to do everything themselves. And what I've been learning and still learning is multifamily is a team sport. you're going to have your lawyers, you're going to have your property managers, you're going to have your equity partners. It's going to be a lot of people involved. And if you try to do all that yourself, you're going to go, even if you could do it, you're going to pull your hair out. You're going to be bald by the time you're done.
Oh, absolutely. I totally agree with you. And I'm learning too, because in the past, I was like a lone wolf. I do everything myself and
Yeah.
I subcontracted out. But I love this way, and I'm changing my mindsets. It's a teamwork, and
Hmm.
yeah, it definitely. I'm loving it. Yes.
Right, right. So, what are some markets that you're focusing on right now?
Now it's Dallas, Austin, and the Florida. So
Hmm.
I think the more you get involved, and then you're learning. And I'm in Philadelphia. I'm like reading Dallas news
Yeah.
to learn the market. And it's like I'm thinking if it's a single family, long distance investment probably is little challenge. But
Hmm.
with apartment, especially the one is more than 100 units, it's easier. It's
Right.
easier because you will have the people on the ground to managing it for you, not just managing one single house there.
Right, right. I mean, that's a good point. And you mentioned you read the news in those marketplaces to try to figure out what's going on. And one thing that I've done is set up Google alerts. I don't know if you're doing this, but set up Google alerts so every time something interesting pops up around multifamily or housing or job growth, anything like that, I automatically get an alert. So it's a really good way to stay on
I'm
top of
gonna
the
take
market.
your tip. I'm gonna do that. I'm gonna do that.
Oh yeah, it's great. It really is, man. I love it for sure. So as far as the deals go, when you're looking at these marketplaces, and obviously you vetted these syndicators, what kind of deals are you guys looking at right now? Is it like 100 plus unit, 200 plus? Like, what do you look for?
Yes, actually, we did like one, two, two. So they're all 300 units plus. And
Mm-hmm.
because the operator is more experienced, and you do larger, and I can see the scale of economic, and I'm looking at because I do flipping, right?
Yep.
In flip here, if I buy a stainless steel appliances for the kitchen, right? You
Yeah.
have the stove, the microwave, dishwasher, and the fridge.
Yep.
The cheapest I can get is 2,200, the cheapest. And I'm looking at the operators' cap expense is 1,450.
Yeah.
How do you compete with that?
Right. Right.
Yeah,
Right.
yes. And
Yeah.
so the investor will ask, and they said, this is a risk. And I have people who are landlords, and they have the single family, and they go like, well, we don't understand that. When people don't understand, they think it's a risk. But
Right.
when you break down saying, if you have one house is a vacant, you have 100% loss. You own two house, that's a 50. You own three house, that's a 33%.
Yep.
So it's so forth go on. And
Right. Right. Right.
100, you have one few vacant. You're not going to sweat about it.
Right, right. It's so funny. I was talking to a guy yesterday, and I was telling him that obviously every investment has risk, but your risk is very minimal when you're looking at a 200-300 unit complex. I mean, even if 20 people leave, you're still not going to be sweating because that's a fraction of what the units are there, the tenants is there. So I really love multifamily for that reason alone.
Me too. Me too. Yes, it's not like a stock. I have this little story to tell you. The
Yeah.
company I worked, right? When I left a few years before
Mm-hmm.
2003. I'm not going to mention the name. So the company was financed in a finance service company,
Yep.
had 20,000 employee.
Wow.
Okay, so in the 2008 economic crisis, the company, it just went bankrupt.
Mm.
And and I was silly enough. When I left, I still owns the company stocks, right? So I said, well, the stock is not, if the company is this big, it will come back. So I'm
Right.
holding on to it, and with it was the stock from 68 is just coming down, and I hold it. Guess what? Down to zero.
Oh my God.
So from there on, it's like all my investment, I'm telling myself I need to have hard assets backed.
Right.
Yes, that's my, and I'm just so thankful I wasn't working for the company. If I still work for the company, I lost my job. So all the employee got laid off. Or lost my job, lost all my stocks.
Yeah. Yeah. That's, I mean, I know that it hurt, but it was a learning experience. It was, I know you learned from it, and it sounds like, for now on, you're only investing in stuff that you can see, feel, and touch, right?
Yes, and it can something you can control.
Right.
And if we have, like everyone is talking, we're at the peak of
Yeah.
the market. If there is any recession, and I'm thinking the people still need to have a place to live.
Right.
Yeah, and then I have investor ask me, so well, the project is 5 years. What if by end of 5 years is you're in deep in recession? You can't sell the price you wanted. And well, I said, if you can't sell, you don't have to sell. You can hold on to it.
Yeah.
And the assets, if you buy right, still produce income
Right.
for the
Right.
investors. Yes.
Absolutely, and that's a really very solid point because it's been talked about over the last couple of years that we're heading for another recession, and everybody keeps saying this is going to be the year, but it hasn't happened yet, and it's going to happen at some point.
Right.
But the best thing you can do is, like you said, be buying properties like multifamily. Don't overpay. Be buying something that has a cushion in it, and if you're in the B and C asset class, you're going to be pretty solid because people that's in the A class, they're going to be moving down to the B and C because they can't afford those high rents in the A class. So I can't wrap my head around buying A class. It just doesn't make sense to me.
Yeah, I agree. I just saw the other day in Philadelphia, they have this new apartment, and they're even in Philadelphia, which is not top market, and the two-bedroom unit was averaging like a 300. And like in Philadelphia, you can buy a row home, like a row home, like with 3 bedroom, 2 baths, and it's brand new for 300. So
Wow.
I don't understand the rationale
Yeah.
behind it. Yeah.
That's crazy. That's crazy. Well, to each his own on that, let's talk about how, because what you focus on is raising capital, right?
Yes,
Yeah,
correct.
and we got to be careful about what we say because of SEC compliance. But where number one, where are you finding your investors at? Like, what's the best place for people to go and find investors that's trying to raise money?
Well, most is people that I know, and I in the community. There's two sites for me. So there is I'm a part of the local RIA group,
Mm-hmm.
and I've been and also I'm on the board of the RIA group. So I'm the treasury, right?
Yeah.
Counting monies for the group. So I've been it's a nonprofit group. So I've been there for going on 10 plus years.
Mm-hmm.
And then I also involved in the Asian community here, and then different groups, the arts group, different group, just to give
Yeah.
and uh, and to give. And now I know lots of people, so I can present the opportunity and basics teaching to teach people there is alternative. I know most people that I know, they are all their investment is stocks,
Yeah.
mutual funds,
Right.
and they never even heard of uh, the other alternative you can invest in multifamily.
Yeah.
And myself, before I thought that was just for the super rich guy
Right.
owns those buildings. And so it's a gradual uh, process to educate people. And then it's up to them to make a decision whether they wanted to invest or not.
Right, right, right. And so what are some of I guess the most common objections you hear from people that are considering it but they're not sure, they haven't, completely crossed the line and say, yeah, I want to do it. Like what's the biggest objection you hear most of the
Most
time?
that I think is don't understand. And my lesson is I will call friends saying, hey, are you interested? And so then we get together and I will jump into it, start talking. And I realize that it's I need to listen more and
Yeah,
just what's their concern. I think most people just presume it's risky.
right.
They don't really don't understand.
Right, right. Gotcha. So, really, then, when you're talking to anybody that's considering investing, the first thing you need to do is just kind of understand where they at and what's their knowledge of multifamily investing, right?
Yes, yes.
Yeah, yeah. That's a good point. And there's a quote by Zig Ziglar, and it's one of my favorite quotes. He says that, and I'm kind of saying it my own way, but he says that if you help enough people get what they want, then you'll get what you want. So it's all about just adding value to other people, whether that's giving them knowledge, bringing deals to them to help them understand how you break these down, how are they underwritten, what kind of value adds they're putting into these deals, showing previous track records. All of that stuff is something that's very valuable to them. Even if they're not going to invest right then, just exposing them to that kind of material will open up the doors in the future to other opportunities.
Yes, yes. I think that the more the people who invest the first time, and there are people who already experienced as a landlord. I have a group. I set up a group, and it was a landlording group.
Yep.
It's a few years ago. People will call, and there's people I will call it's amateur landlord. They have full-time job. They buy one or two on the side, and then they don't take time to learn is a how to managing the property, or
Right.
there's a law, landlord tenant law that
Yeah.
you need to follow, and then they do this stuff uh, really silly, and then they will through friends they know I'm doing this, will come asking questions. So by the time they get to me, it's really bad.
Yeah.
Either the tenant has been there, like hasn't paid anything for a whole year.
Wow.
So what, instead of I'm answering the phone for each individual, why don't we set up a group if anyone has a question and ask. And then
Yeah.
there's other landlord can answer, so we can, you don't feel alone. There's
Right.
somebody, and share the experience. And I still can see there's people going through this headaches, and but still holding on to it, and they go. So it's like their mind is it's not really open,
Yeah.
still holding on. But that's or there's someone has to be controlled. They want to do everything by themselves.
Right, right, right. Gotcha. Okay, so let's jump into the next segment of the show. It's going to be a deep dive into one deal that you can recall. So let's talk about the deal.
The deal, yeah, we do the one we invest. It's called Highland of Preston. That's in Plano, Texas. So it's
Mm-hmm.
a big operator. And I went myself, I even went there to see. So I fly to there
Yep.
to see the market and to see the property myself. And then in addition to just look at the investment package. And I can feel the difference, in not only you read on the news, you read on the paper, and when you are on the street, I think it's a different thing.
Yeah.
And then the area, it's so close. It's 5 minutes from a business park called Legacy Business Park. So I went there too and saw a big sign at the entrance door says there are 110,000 employees in this park. I
Wow.
was like, oh my God, I was
Yeah.
so impressed. And we drove through, right? And I never, in Philadelphia, you will never see that. It's like you drive, it's like the company, the big size, they have their
Mm-hmm.
presence, the office building is so huge.
Yeah.
And the Liberty Mutual, and it's just like driving. And when you have that many jobs
Yeah.
and you're not going to be, your building is not going to be vacant, or you're
Yeah.
not going to have high vacancy.
Right.
So
Right.
the project, it was when when they purchased is, I think if I remember correctly, it was 92% already occupied. So
Wow.
the day one there's a cash flow. You don't have to spend tons of money to renovate it.
Yeah. Yeah. So, what was the unit count again on that? How many total units was it?
It was a 380 units.
Wow. Wow, that's a pretty big one.
Yeah, it's
Um,
a giant one.
Now, was there a value add play that you guys were looking at on this one?
Yes, absolutely. Because all the deal, if I get involved, I wanted uh, value add portion. So the rent is below the market, and
Mm-hmm.
the building is 20 some years. It was built in 1980s.
Okay.
So it's 20 some years old, and the interior, the outerior, I think the previous landlord had upgraded, spent money, had upgraded, and you can see I love those. It's like almost like a townhouse style. It's brick
Yeah.
exterior. I think it's best because the brick is lasts longer
Right. Right.
compared
Right.
to the vinyl outside. And then the interior is 20 years old, so it's outdated. And
Yeah.
then the business strategy is to gradually uh, upgrade them and then bring the rents to the market.
Yeah. Now, did you raise the capital for the capex, or did you use a bridge loan?
We raised the money for the capex too.
Okay, that's great. That's great. And what's the end strategy on this? Is it going to be to sell in a couple of years, or are you guys going to refinance out the initial equity? What's the goal?
The goal is the period is 5 years. So anticipate to sell in 5 years. They might consider to get a loan in between to refinance, maybe in
Mm-hmm.
years, but that was not figured into the pro forma.
Yeah.
And
Yeah.
if the market warrants, and it might do that, and then so we'll give portion
Yeah.
of our equity back to the investor.
Yeah. Now, do you remember what type of loan they put on it?
I think it's an agency loan.
Okay. Okay. Good. Good. Man, that sounds like a really nice opportunity there. Do you guys own any other ones in that area?
Yeah, the operator actually owns a lot in the area. I think close to 7,000 units.
Oh
So they
wow.
have. That's also one of the things I look at it. A operator, and they have a presence in the local, and then you the property management firm that they're using is the top notch one,
Yeah.
and also the labor, construction, everything. It's like within a one place, close to each other. It's very easy to managing it.
Yeah. Yeah. Gotcha. Gotcha. Well, that's cool. That's cool there. Sound like you guys got a very good asset, and you've partnered with somebody that's making some noise over there. So that's a good deal.
And so they do distribution. So I think that's when the investor sees the distribution,
Mm-hmm.
and I think their confidence grows.
Right.
It's before it's me telling them
Yeah.
and showing them this, but they're just on the paper. I think
Right.
you see the money come in, then the and also I will update them on monthly basis what we're doing,
Yeah.
How many units has been rented, what
Right.
renovation, where we are.
Yeah. Yeah. That's good. That's good. Communication is key, especially when you're talking about somebody else's money. You know.
Yes.
Okay. Cool. So let's segue into the last segment of this show. It's the lightning round. Got a couple questions for you. You ready?
Yes.
All right. So, what's the best advice you've ever been given?
I think when I was young, my mother always told me, work hard, eh, be honest, and work hard. I think it serves me well. And always trying to be upfront with people, be honest. And maybe sometimes the honesty, and you will have, I remember you might not get the deal you want,
Yeah.
and that's okay. I think that's why when I was in the residential field and the seller, do I get great deal? I do, I get great deal, but I tell the seller upfront
Yeah.
and then we're still friends all this after all these years.
Right. Right. That's great.
And
So, what's the best book you've read this year?
this year I read I think his name Chris Voss and Never Split the Difference.
Oh yeah.
I heard so many people recommend and I was like,
Right.
oh my God, how you do that? You never even split difference. I thought is you split the difference is the best.
Yeah, that's a great book. Oh my God, I got it on the Audible, and I listen to it often, and that's a really good book.
Yes, actually from there, and I'm not just never split the difference, but I think it's he most emphasized listen and deep listening,
Yeah.
listen to the other party and what they wanted, and then you
Right.
to work. It's mind opening. Yes, I
Yeah.
learned a lot.
Right. 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 Absolutely. Okay. So, what are some rituals you're doing right now that's making you a better investor?
Oh, I am actually working on that with, and I gets up in the morning, right?
Mm-hmm.
Jump into any work like my and I normally from 7 to 10 that time is for myself. I write the journals and I read books.
Yeah.
Yeah, and so that's what I think that's the time you learn and grow.
Yeah.
So that's the time I set up for myself, and
Good.
it helps. Yeah.
Yeah. Yeah. I would agree. It's less distractions first thing in the morning, so
Yes.
that's the best time to get it done. Okay. So, what is one thing you're doing right now to help you improve your business?
I'm trying to do it one thing at a time. I'm learning to reach out to more people and to understand. I'm reading the psychological books, right?
Mm-hmm.
Before I'm just dealing with people similar to me. It's you feel comfortable, and now I think in this business you have to understand the other people. So constantly remind myself
Yeah.
listen and
Yeah.
and understand each person is different and how they think is different too.
Right. Right. I'm trying to think. I think it's a book called Emotional Intelligence. I've been hearing a lot of good stuff about it. I haven't got it yet, but I heard that's a good book that kind of digs into that topic a lot.
Yes, yes.
Okay. The last question here: if you can give your younger self one tip in regards to investing, what would that be?
Hmm. I think to learn to partner with and to learn that the concept is a teamwork. I think and now I'm thinking back is to get 10% of everything is better than you get 100% of one thing. I think
Right.
teamwork will help you to grow faster. And
Right.
I wanted to, eh, and I'm telling I have two sons. I'm telling them the same way. Because before I just like, oh, I don't have to really do it. I can do all this one, two, three.
Yeah.
But your energy or time is limited. Your power is limited.
That's right. That's right. So, man, Shirley, I really appreciate you coming on the show today. Tell my listeners, how can they get in touch with you?
Oh, they can either call me. My number is 610-357-2543, and they can email me. It's a Shirley at goldenbridgeinvestment.com.
Great, great. Well, Shirley, I appreciate you coming on today. You added a lot of value to my listeners. If there's anything I can do to help you in the future, just let me know.
Oh, I'm honored. Thank you, Willie. I
No
enjoyed
problem.
it.
No problem. Have a good day.
Do the same.
Okay.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.